Hey, what's up, my friend? So you're watching this video now because you might be thinking, man, Rayner, should I quit my job to trade full-time? Now, for most of you watching this video, I can dare say, 80% or more of you watching this video, the answer is no, right? Because you don't have what it takes. Let me explain. Imagine this. Imagine you want to earn $50,000 a year from trading. Some of you could be wanting more. Some of you might be thinking, man, Rayner, $50,000 is really awesome, right? I only asked for $10,000, whatever. Let's just say it's $50,000. And let's say your trading strategy on average makes about 20% a year. How much capital do you need, right, to get this $50,000 a year on average return? Well, the formula is very simple. You take what you aspire to make in a year. In this case, it's $50,000. You divide it by your average annual return, which is 0.2, and you get about $250,000. That's the amount of capital that you must have in your trading account, okay, to make an average of $50,000 a year. If you don't trust my math, you can just take $250,000, multiply by 20%, and you get $50,000 back. This figure that you dream of, that you aspire to. And that's why I said, right, for most of you watching this video, I don't think you have, or I don't think you want to just, plow $250,000 into your trading account, right, to trade the markets. And also that's assuming you have a trading strategy, a proven trading strategy, right, that works, right, that generates an average of 20% a year. Now, some of you might be thinking, but Rayner, I don't need $250,000 to start with. Rayner, all I need to do is to spend more time watching the markets for more opportunities, and boom, I make more profits, right? I can do better than 20% a year, Rayner. I can do 500% a year, Rayner. I just need to watch the markets for more opportunities. Well, sorry to burst your bubble, but more screen time does not equate to more profits. Why is that? Let me explain. Trading is not like a job, right, where you're trying to learn how to grow some vegetables, right? Because if you try to grow some vegetables, okay, let's say, you decided to be a full-time vegetable farmer or whatever, you can probably first few months learn how to, grow the vegetables, learn what is fertilizer, soil, sunlight, water, etc. And within a few months, you probably can successfully grow some vegetables that is legitimate enough to eat without poisoning yourself. Agree? Yeah, I think most people can do that. But trading is different. Trading is not like growing vegetables. It's more like trying to become a neurosurgeon, right? Okay? So let me ask you, can you successfully do a brain surgery after a few months of training? Probably not, right? You probably turn someone's brain into mashed potatoes. Yeah? So there's a steep learning curve, right? Trying to be a neurosurgeon, you need to spend a number of years in school, become a resident, get more experience, level up, further your studies, and then maybe after 12-15 years you become a full-fledged neurosurgeon. Okay? So, and it's the same for trading. There is a steep learning curve involved, but I can dare say that trading is not going to take you 10 to 15 years to be a profitable trader. In fact, there are 5 stages to profitable trading, and I want to share them with you right now so you can better expect, right, what to expect. So the 5 stages to profitable trading. Stage number 1 is this, the hyper newbie stage. At this stage, right, this is where you feel all excited about trading. You have high hopes, right, eager to learn everything and anything that you can get your hands on. Things like candlestick patterns, price action trading, trend lines, support resistance, etc. Okay, and the more you learn, the higher you feel, right? The more excited, the higher you feel, right? It's like taking drugs. You feel very high whenever you learn a new trading strategies or technique. And during this stage, right, you will come to a point where you realize that you start blowing up multiple trading accounts. So you fund a trading account, could be a paper trading account, a live trading account, and you find yourself, blowing up this trading account. It turns into zero right after a few trades. And why is that? And when you realize that, that's where you move on to stage 2, which I call the risk manager stage. At this stage, you realize the importance of risk management. You realize that you can't bet the farm on each trade. It's probably just 1% risk on each trade. So this way, even if you lose on the trade, it's just an end bite. So you learn how to calculate your position size, etc. And at this point, right, this is where you stop blowing up your trading account. But you face another problem. Now the problem that you're facing is death by 1,000 cuts. So yeah, you are managing your risk. Yes, you stop blowing up your trading account, but your equity curve, right, the P&L in your account is going in the wrong direction. It's still going down lower over time, despite having proper risk management. And when you realize that, that's where you realize that, boom, stage number 3 is this, the Lone Ranger. This is where you realize the importance of having an edge. This is where you realize that you must have a proven trading system that works. Okay, because you can have the best risk management out there, but without a proven trading system that works, you will still eventually suffer death by 1,000 cuts. So at this stage, you got to, get your hands dirty, do the work like, back testing, forward testing, researching on trading strategies and find something that works for you. And I think most traders, for me personally, I spend a lot of time in this stage. And if you do get out of this stage, this is where you move into the fourth stage, the profitable trader stage. So at this stage, you have found a trading strategy that works for you and you've been profitable over the last 12 months. Now at this stage, right, what you realize is that yes, you are a profitable trader, but when market conditions change, right, your trading strategy goes into a drawdown. It starts to underperform in a given market condition. That's when you realize, man, it's not just enough to be a trader with just one trading strategy. You need to develop new trading strategies that can tackle, that can handle or do well in different market conditions. And when you realize this is where you move into what I call the fifth and final stage, the business owner stage, where you treat trading as a business, where you continuously develop new trading strategies so you can profit in different market conditions. As you can see, right, there are 5 stages to profitable trading, and many traders, right, they make the mistake, right, of thinking that they can quit their full-time job. They're probably at stage 1 or stage 2 at best, and then they can quickly jump to stage 4 or stage 5 right after they quit their full-time job. Their mindset is that by quitting their full-time job, they can accelerate their learning curve, right? That's true. Yes, you can accelerate your learning curve because you can spend more time researching, testing new ideas and stuff like that, but it comes with a cost. And let me explain what are some of these costs, right? The first cost is that more stress will lead you to make poor trading decisions, right? So now, question is, how does quitting your job make you feel more stressed and cause bad trading decisions? Let me explain. When you quit your job, you are removing a fixed source of income, okay? That's fixed source of income. But here's the thing, right? Trading doesn't give you a fixed source of income. As a trader, some days you can make money, some days you can lose money, some weeks you can lose money, even some months you can lose money. And depending on the type of trading strategies that you employ, you can even lose money in a given year. Okay? So for example, this is one of the trading systems that I teach, right, in my program, the Ultimate Systems Trader program, right? So this trading system is called a mean reversion trading system. You can see that since 2000 over here, right, 2000 to 2024 right now, this trading system has been consistently profitable in the long run over the last 20 plus years. Bull market, bear market, whatever, it's making money in the long run. And if you were to look at this trading system in more details, this is the results. You can see that on a given month, on a given year, this system actually loses money. So for example, in 2022, nothing to hide over here, this system actually lost 3.8%. In what year is this? This is 2014, this system lost 3%. Okay? And if you look at the individual months, right, in 2024, June, July, August, September, this system actually lost money. Okay? So imagine this, right? You rely on your trading profits to put food on the table, to pay the bills. How stressful would that be, right? Because you will adopt the need to make money syndrome, right? And when you have the need to make money syndrome, you make poor trading decisions, right? For example, you make poor trading decisions like number 1, widen your stop loss, right? So for example, a trade goes against you, but you refuse to take the loss. You can't take the loss because if you take a loss, right, then you don't have enough money, right, to pay your bills this month. So you widen your stop loss. And guess what? The market somehow knows what you're doing. It reaches, right, the widest, the further away stop loss that you have set, and eventually still hit that stop loss. And your loss is now bigger than expected. Yeah? Or how about this? You average into your losses, right? So the market goes against you, you tell yourself, you know what? I'm going to average down into my losses, because if the market has a slight bounce, I could get out at break even or maybe even a small profit. Let me share with you a quick story, right? I know of a trader back then, right? In my prop trading days, right? This trader, right? He was trading the Nikkei futures, and he was long the Nikkei futures. And after a few moments, right, he was down about $2,000. So his mindset was this, okay, I'm down $2,000, I'm a scalper. Let me average into my losses, right? Because if the market has a slight bounce, which happens pretty often, right, in the Nikkei back then, he could get out at break even or even a small profit. So he averaged into his losses, right? He buy even more contracts, and the market continued to go against him. He went to the point where he was down about $6,000, and the risk manager had no choice but to tap him on the shoulders and tell him to cut his loss because his risk limit is breached. Yeah. And the moment he cut his loss, guess what? The market rallied back in his favor. He felt like an idiot, and he smashed some stuff in the office. Yeah. So here's the thing, right? That's what happens, right? When you're averaging into your losses, right? Is that, you know, you make the hole even bigger, right? You make even poorer trading decisions, and it could happen, right? Especially when you have the need to make money, when you put food on the table, when money is so essential, you make poor trading decisions like this. Or how about this? Revenge trading. Okay, you suffer 1 or 2 losses, you cut those losses, but you quickly re-enter back new positions, new opportunities to try to make back what you've lost earlier. I personally have experienced this in my early years of trading. I was trading some simple breakout trading strategy, right? Whenever the price breaks out, you know, you go long. So I tried that trading strategy, I followed the rules, and the first 2 trades were losses. And my 3rd trade, guess what happened? I didn't follow the rules, right? I simply, you know, create new rules, right? Because I saw new opportunities in the market. I was pretty much revenge trading, trying to make back the earlier losses that I suffered. And those new trades that I took were also losses. And that cycle just, you know, rinse, repeat itself. So all these poor trading decisions, right, will become a lot more apparent, right, when you really need money to put food on the table. So when you quit your job, your wealth grows slower. Let me explain. So if you look at this, right, imagine this. You have a $250,000 trading capital, okay, and you earn 20% a year, which is about $50,000 a year. And you withdraw all your profits for, you know, to fund your lifestyle, pay the bills, whatsoever. Now let me ask you, what's the size of your account after 10 years? Well, assuming that, you know, you make $50,000 every year, you withdraw all that $50,000 every year, the size of your account will be the same, $250,000. And if you take into account inflation, right, that $250,000 is clearly going to be a lot smaller, right, compared to it today. Yeah. So now, what if you have a full-time job, or you have a side gig, or you run a business or whatsoever, and you don't need to withdraw your profits for your living? How would that change? Well, if you look at this over here, this is a simple compound interest calculator. You start off with $250,000. You grow your account for the next 10 years at 20% annual return. In other words, if your trading system does an average of 20%, you put here 20%. Okay? How much would your account be worth after 10 years? Well, your account will be worth, drumroll, get ready for it, right? $1.5 million after 10 years. Compared with $250,000 earlier, can you see the difference? This is an opportunity cost of like 1.3 million over 10 years. And what if some of you who have a full-time job, you have surplus cash, and you can actually regularly add funds to your trading account each year? Let's say, you know, instead of adding $0 to your account each year, now because you have a full-time job, you can add in an extra, let's say, $20,000 a year to your account. Now, how much would your account be worth after 10 years, right? Assuming, again, you're growing it at an average annual return of 20%. Well, your account now will be worth $2.1 million. That's the opportunity cost, right? By not having a full-time job, or, you know, earning a source of income somewhere else. Okay, because you decide to pursue trading full-time. Okay, and by the way, I'm just giving you this example, just projecting based on the next 10 years. If you do it for 15, 20, 25 years, the numbers will be even larger. The opportunity cost is going to be that much greater to you. Okay, so think about that. So now the question is, should you quit your job to trade full-time? Okay, so a few things, right? If you want to do it, understand, right? The freedom, the flexibility. Well, I'm not sure if there's flexibility. Yeah, there's quite a bit of flexibility, right? The freedom, you cherish it a lot, and it might be worth even more than just, you know, dollars in your bank account. So here are a few things to consider, right? If you want to quit your job to trade full-time. Number one, make sure you have sufficient trading capital. At least 6 figures, if you ask me. At least if you're based in the US, in UK, Singapore, you need at least a 6 figures trading account, assuming you do an average of 20% a year. And, you know, you have X dollars to earn, like, you know, $40,000, $50,000 a year, you know, you probably need like $200,000 to $250,000 to start with. Of course, if you can increase your returns, maybe instead of 20% a year, you can do 30, 40% a year, or 50% a year, even better, right? You don't need that much large of a capital. But I do not know personally of any trader who does, you know, 50, 60% a year consistently over the last 10 years, right? So again, manage your expectations, right? You don't want to be, you know, taking on more risk, right, just to hit the percentage return, because what's going to happen is that you will suffer a larger drawdown and might even blow up your trading account. It means all your capital go to zero, and that's even worse. Yeah. So make sure you have sufficient trading capital. Number two, make sure your living expenses for the next 12 months is at least covered. So this means that you have funds that is not related to your trading account. These are funds, right, that can support your living, right, without taking from your trading account. This way, no matter what happens in a given day, week, month, right, you know that your livelihood is not affected, right, even though you might have a losing month. So that living expenses, 12 months of it covered somewhere aside from your trading account. So let's say on average you spend, I don't know, $5,000 a month for your living expenses, maybe you have a family or whatsoever. Make sure you have at least $60,000 set aside away from your trading capital. And finally, you must have a proven trading system that works, right? You might have sufficient capital, you know what to expect, but if your trading strategy doesn't work at all and you think that you want to do it full time, trying to figure out this trading strategy as you go along, then guess what? You're going to be, the opportunity cost is really great. I'd rather you do this research of trading strategies to find the strategies that suits you, to find the trading strategies that work while you have a full-time job. Do it on the sides, right? Do it while you're working, do it after work, before work, on the weekends, right? So this way, the opportunity cost is a lot lesser for you. And by the way, if you want to learn such a trading strategy, a proven trading strategy that works based on data, numbers, backtesting, then you can join me in my next event called Stock Trading Secrets. Just go to my website, tradingwithrayner.com, and you click this red button, or if you want to go to the direct link, it's just tradingwithrayner.com/STS, right? So during this 2-hour webinar, I will share with you a proven stock trading system that works, right, based on my own research and testing, generated about 3,225% right over the last 22 years. I will give you the exact trading rules, the entries, the setups, the exits, chart examples, so this way you can actually take that system, okay, and trade it on your own or make certain tweaks, right, and then refine it to become your own. I recommend that approach actually. So the next event, it's in November. It's on a weekday. I believe the timing this time around we can actually accommodate both US, UK, people from Australia, Singapore, right? So this timing, 7:30 to 9:30 p.m. Singapore time. And during the webinar, we'll talk about the fastest way to become a profitable trader, even if you've tried everything else and failed. How to safely and consistently grow your trading account to 6 or 7 figures and beyond, even if you have a small starting capital. How to profit in bull and bear markets even during a recession, right? So all this and more in this webinar. It is free. I'll put the link somewhere below this video so you can sign up for it. With that said, I wish you good luck, good trading. I will talk to you soon.